If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for Marathon Oil Corporation with the ticker symbol MRO. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only. It does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly and monthly chart. So here we have the daily chart for MRO. It looks like it's been going up since the beginning of this year, even before that, but we'll focus on this year's price action. So for the most part, it's been inside of an uptrend, but the uptrend is came to an end because there was a break outside of this channel. You can see this was the first break of the pattern. But normally we don't reverse. Usually we go up to stop out the shorts thinking we have topped, and then we reverse. So you can see that we went up one more time, stopped out those shorts over here, made a blow off top, or you could say the climax of an exponential move, which is right over here. And this is also a breakout on the opposite side of the channel, which is kind of like an overshoot, which can lead to a large sell-off, which is exactly what we got. So there were multiple reasons why the market should sell off, not random at all. So we did get that sell-off, and this pattern is also played out. You can see that it was also a first break of this pattern, and we still went down to retest the prior low to stop out the longs thinking we bottomed. So we went down a little bit lower than the previous low. So what does it look like we can do now? Well, it looks like both trends are played out, so we could see some sideways action in the market. You can see that Wednesday was a doji bar, so that's an indecision bar. You can see that prices traded up, prices traded down, but came back right in the middle. So that's indecision. It's not really a solid bar like these previous ones, where it's trading in a particular direction. This is a doji, so we could see some sideways action. Another thing that can occur is we pull back probably up to that EMA around the $23 or $24 level, and another thing that could occur is we continue lower. Just because we have a break of the pattern and a new low, that doesn't mean we're going to reverse right away. So you just got to be neutral in the market until you see a clear bias to trade from. So as right now, there's no clear bias. Both trends are played out. So we should just wait till a trend forms or until we see a nice trap. So as right now, if I was to bet, obviously we're going to continue higher. This is an oil company. Oil is probably going to be worth a lot more than it is today. Right now we're just seeing a pullback, which is normal. It happened numerous times before, and I'll show you guys why on the monthly. I'll show you guys some reasons why, or some examples on the monthly chart. As right now, if I was betting, we're probably going to continue higher, just from looking at this and what I known about oil stocks in particular. So that's what I see on the daily chart. No clear bias in any direction. So we'll have to look at a longer term pattern. So let's switch over to the weekly chart. And here we have the weekly chart, and you can see that we've been going up since the double bottom near 2020. In 2020 we saw a massive rally up, so this was like the first decent break of the EMA. You can see that we did fall below it more than any time in the past, but this week is gonna probably be a green candle bar. You can see how bullish it is looking. We're seeing some nice rejection off of these $20 this $20 price level, and also there does look like there's a trend in play. So maybe something like this can also send prices higher, because in the past you can see that we did get a bounce from the support side of this channel, which is this trend line working higher, and we're also back at the same point. So that's what I'm saying. When you look at the longer term pattern, you can see how we're still bouncing off these trend lines. So it looks like we got a nice bounce off of here. We're seeing nice rejection. Bulls are definitely bidding up the price here. So if we get a bounce up, maybe if we come back again, that would confirm the buyer's strength, and then we could see a rally out of there. So that's the pattern I'm thinking is going to play out. I'm sticking with the longs. We've been going up since 2020. Doesn't look like we're stopping anytime soon. and we can go and switch over to the monthly chart after one more thing. So again, if we don't play out the pattern like I've shown before, we could fall back down to that $18 level. I see that this was a breakout point, so we could test it again. So that's if we break this channel, maybe something like this. I think we could find some type of support at that $18 level, and then probably consolidate before breaking out to the top side. So everything still looks pretty good. Obviously this is a pullback, not too terrible, but we'll have to wait to see how it develops. As right now, it's not anything we should be worrying about. So let's go and wrap this up on the monthly chart. And here's the monthly chart for MRO. You can see that in 2020 prices went below the previous low. So MRO was never around that $3 level since the IPO in 1968. So the stock has been on the market for a very long time. You can see that that $5 level was acting as a strong support in the past, and then in 2020 we broke below it, and then we saw a massive reversal, and it looks like the strong resistance point is at the $41-42 level. So that's what I'm expecting this company to go to, just based on the inflation. Definitely more demand and less supply than any time probably in the past. So it would just make sense for prices to reach that high again. If we did that in 2007 and we did it in 2014, it would just make sense that sometime in the next couple of years, or even this year, we can reach that $42 level again. Just looks like a pullback as right now. We were definitely overbought, so we're getting near a nice mean price, which is right where this EMA is. There was also a previous time right here where prices got overbought. We saw a massive sell-off, but then we saw a massive reversal to the top side, and this was from 2008 to 2011. And then we saw a nice rally to the top side. So again, even though we have these interruptions in the price, I'm still expecting higher prices because it's just the bias and the market structure, because we just came off the $3 level just a few years ago, and the price went up to $32 level. So that's a large gain for an oil company. So we're going to see these large pullbacks, but it still looks like there's room to the top side. You can see that there's still all this space right here that we have not entered in. So I'm looking for higher prices. As right now, in my eyes, this is just a pullback. I don't care if it goes up or down. To be honest, it'd be nice if oil goes down. I'm pretty sure 99.9% of people would be happy that oil goes down. Cheaper everything, because everything is dependent on it, almost everything. So I don't have any money in this. This looks pretty bullish in my eyes. So that's everything I see for MRO on the daily, weekly, and monthly charts. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.